Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News Show. It's Sunday, the 20th of July, and it's at about 3:32 my time. I think that's about 5:30 in Eastern Standard Time. And I've got another of my weekly shows that I'm really enjoying doing. They're my longest form shows because I'm talking about a lot of companies, as will be the case in this one. But what's really nice is I think folks are really enjoying the long form weekend shows because they're having some of my highest views. And what makes me the happiest is they've been watched for a very long time on average by every viewer of the shows. And so I'm also changing things up a little bit. This show, I'll have a bunch of new picks for you. So I'll talk about all of my picks. And I'm also starting out with a new format. At the beginning of shows, I'm planning to do, and I haven't really even started marketing yet, but I'm going to be having a sponsor for the shows. And so what I'm doing this weekend, I haven't even had a chance to talk to potential sponsors about it yet. So what I'm going to do is I'm going to highlight one of my picks. And I might as well pull their stock chart up here. And that company is McEwen Inc. They recently changed their name from McEwen Mining to McEwen Inc. And they kind of encompass all of what I look for in a company. Um, I do follow major mining companies in mid tiers, but the bulk of my reports are on the junior gold miners, the developers, the explorers, as will be the case in this show. And with McEwen Inc., they kind of cover all the spectrum for me. What I mean by that is one, they are currently a junior gold miner. They produce about 130,000 ounces a year. Um, and when I look at a gold miner of any size, some of the key things that I look for are that they are increasing their production, bringing down their costs of production of gold, doing exploration to increase or replace their gold production. And so on that front, McEwen Mining covers all of those characteristics. They're producing about 130,000 ounces in 2025. They recently broke ground on a new mine called their Stock Mine that will help them in 2026 to increase their production and also importantly bring down their cost of production. When you do that, that gets you more free cash flow, which is one of the ultimate indicators I look at in any gold company. And you'll notice that in when I do start talking about majors and mid tiers. Um, and they're also doing a significant amount of exploration. So that covers the exploration side of things on their gold projects, primarily in Ontario and also in Nevada. And they're having very great success with their exploration. And why that's so important for any mining company is that it helps them to replace uh, and increase their production into the future. So they need, when you're mining, you're depleting your deposits and you have to replace them. And exploration is how you replace them and also increase your production. So their exploration success is enabling them to almost double their production over the next 3 to 5 years. And so they're hitting on all those key things quite nicely on the gold side of the business. As everybody knows, I'm very bullish on gold. So, when you can do those things right, they are the stepping stone to better numbers down the road. And when you're looking at this company, that can be quite substantial. And I'm very impressed with all the exploration work that they're doing. They're increasing their resources quite substantially with good grades and healthy margins between the cutoff grades and the average grade. And that's what you want to look for when you're looking at resources is that margin between what it potentially could cost you, which is represented by the cutoff grade and the average grade. So that gap between those two is the potential for profitability. And so they're having very good success, as I said, in Ontario and also in Nevada. So I expect to see lots of good news out of them for their gold mining with the new mine coming into production, and also with their increases in production and their decreases in cost of production. And then, of course, the exploration that can always be coming out with news. So I'm looking forward to news on that front. One of the key drivers of their valuation prospects is their copper development project in Argentina. At that project, it is one of the top 10 undeveloped copper mines anywhere in the world. And why this is important is because as the copper supply chain is pretty weak and yet demand is growing. And so, you need a lot more, the world is going to need a lot more copper, and the mining of copper is not sufficient to meet the current demands, let alone the future demands. And a little later, not too far in the future, I'm going to talk about copper and its recent breakout that's been quite impressive. And so, as you can see here, the company has recently gone through quite an impressive golden cross here, and it bottomed back here. So it had a triple bottom actually in March, April, and May, and has since broken out quite significantly. It broke above the 50-day moving average, which is one indicator I follow closely. It also broke through the 200-day moving average nicely, and then had its golden cross here and is trading significantly above the 52-week, or sorry, the 50-day moving average. And so I think that is optimism for more good news to come out of their gold operations. I think they announced somewhere in here, right about here somewhere, that they were breaking ground on their new gold mine, and that helped out the market. And also that they are working on a bankable feasibility study on their copper project. And so that is the highest category of economic assessment. And it is the last major study before you go bring a project into production. This project is quite impressive in that it is in the top 10 for size, and also it's in the lowest cost quartile for companies in the preliminary economic assessment stages. And so now they're doing the bankable feasibility study that could be out at any time now. And also they're looking at taking the company public. The copper company is actually owned by a private company, which is called McEwen Copper. That's the one that they're considering taking public. and the that's owned 46% by McEwen Inc. And then also significant shareholders include Stellantis, one of the world's largest automobile manufacturers. It also is owned a significant amount by Rio Tinto venture, a Rio Tinto venture called Newton. And then also Rob McEwen himself owns a big chunk of McEwen Copper. So collectively, between McEwen Inc., Stellantis, Rio Tinto's venture Newton, and Rob McEwen, they own all the stock. I think it comes out to 90 some percent of the stock, 96 or something like that percent of the stock. So when McEwen Copper goes public, it will be on the New York Stock Exchange, and it will be a very tightly held company by only four entities, and then whatever is raised to take it public. And, for investors in the United States, especially that want exposure to a copper company, it will be one of only a small amount of publicly traded New York stock listed copper development companies. So I have very good hopes for the future of McEwen Copper and economically what that means to the valuation of McEwen Inc. So, in a wrap up, McEwen Inc. has it fits into a few categories of companies and kind of encapsulates the various kinds that I looked for. One is the junior gold miner. They're also a developer of a world-class copper project, and they're also doing a significant amount of exploration. So those are key categories of companies that I'm looking for, and that's why I wanted to make them sort of a highlight pick at the start of the show and not too far down the road. This segment will be for companies that I bring on as sponsors of the weekend shows, where I talk about all of my top picks. All right. So now that I've done that intro, I'm going to get into the metals, and I'm going to start out with gold. First, I'm going to go into the overall chart without any indicators, and I want to show you a couple of key things here. One is this basing period from Aprilish till now. Secondly, I think it's really important to see how tight the range is in this basing period of late. For the last few weeks, actually, it's been getting very tight. And this is the inflection point of a basing period. Now, I'll also point out that you notice that the volume has kind of dropped off in the last little while. Well, it's at this inflection point. So now I'll go back to the last basing period, which was about from November until the beginning of 2025. And you'll notice that it had a pretty healthy base and then a significant rally. And I'll also point out that towards the end of the base, look again here at the volume. The volume gets very low again. And this often happens in inflection points. Whether something is going up or down, I kind of wait until the volume kind of dries up, and then I think we're ready for a new direction. And I believe, based on the fundamentals, that that new direction is going to be the upwards direction. The fundamentals that have been driving gold since the significant breakout in the early part of 2024, when it broke above 2000, out of 2000 sort of top and broke into these new series of record highs, is the death spiral of debt. that's becoming more acute in the United States and throughout the world. Another thing that's sort of breaking the camel's back, the debt camel's back, is the cost of servicing that debt is getting it is unsustainable. And so I think the fundamentals are there for gold to have a breakout to the upside. And ultimately, I think the world's debt and fiat currency system is broken. And that's why gold is trading at record highs against practically every fiat currency. So these fundamentals are still in place. And I think an added factor that's very bullish for gold is that stagflation is starting to get more significant. It's being talked about more than when I started talking about it back in 2024. And I think it's going to continue because once the stagflation genie gets out of the bottle, it's hard to contain it or hold on to it without it getting out of control because the Federal Reserve really has no tools to fight stagflation. So those fundamentals are very bullish and why I think the next move is breakout to the upside. So I'll go back to this basing period, and then there's another basing period that happened around the same time last year as what's happening now. Again, it started in about April and it continued until, early July. Guess what we're looking at here? April until early July. So I think it's due for another significant breakout. And I'll point out this period here towards the end of the basing period. Again, the range got very, very tight as it did here before the breakout and as it's doing now. And also the volume dropped off quite significantly. So I think that these are all very bullish signs that the next move in gold will, after this inflection point or this tight trading range, is that it'll break out to the upside. And then you go back to late 2024 or 2023 and early 2024, and there was another basing period, and it also saw the volume dry up and the range tighten up before it made a breakout. So all of these things are very positive for gold. Now I'm going to go and I'm going to add the 50-day moving average and the 200-day moving average because this gives us more confirmation of what I'm talking about. As you can see here, it got really tight with coinciding with the 50-day moving average. Again, here in this basing period, same thing. And guess what's happening again here? So these are all reasons that I think that gold is about to have a significant breakout. Speaking of significant breakouts, look at this one here with silver has broken significantly above the 50-day moving average and the 200-day moving average. In my last weekend show, I talked about why this $35 level, and you can go back all the way to the 2001 to 2011 gold bull market and see how important that $3,500 level is. And here it started looking like it wanted to break through it, and it did. And it's been upwards ever since. And so silver's in a really nice looking trend. Platinum. Platinum has gone through a long basing period of a few years and has recently also broken out quite substantially against that 50-day moving average. It had its golden cross back here and has just been ripping. I think a lot of that could have to do with supply issues from the major sources, which are which are South Africa and also Russia. And so I think that this is a precursor to some supply issues and demand is getting stronger. Now, before I talk about copper, as I'm talking about platinum, I'll also talk about palladium because those two are very closely linked, platinum and palladium. And as you can see here, palladium actually probably made its breakout sooner or before palladium or platinum. Palladium did. Back in early April, it was trading down to $870 per ounce. Had a breakout and a bit of a basing period, and then it has also broken out. But then the Golden Cross happened a little bit later for palladium compared to platinum. I think this is a very constructive cup and handle here. When I see the right side of the cup significantly above the left side of the cup, that usually means that the handle is not going to last very long. One could argue that maybe it's even already happened in here over a very short period of time, and then it's onwards and upwards from there. So platinum and palladium are doing very well, as is copper. So let's have a look at copper. Copper bottomed around the same time that palladium did and has been on a tremendous tear ever since. Down here, it was at about $4 per share per ounce per pound, sorry, and then it ran, had a basing period, another important breakout, and this is the most important breakout because above $5, and it's only touched that a few times in history. And two of those times happened, one in 2024, one in 2025, and now it has broken out significantly. What caused this big breakout is when President Trump announced that he wants to do a 50% tariff on the price of copper. And, it didn't take long before people started to question, well, is it possible for them to even do that? Because, that's going to cause an increase for the domestic producers. And the domestic producers in the United States only produce that a little less than half of what is needed in the country for domestic consumption. So, the idea that that could stick started to be questioned, but even while that questioning is happening, it's maintained a lot of this rally from, let's say, $5 to as high as $5.87 intraday. It's maintained a good chunk of that move, over half of this spike. And that's impressive. And I think the reason that that's happened, why it's been able to maintain a lot of its gain, is due to the fact that it highlighted how tight the supply chain is. And, with any kind of announcement like that that could affect demand. For example, if the US end users of copper realize that, hey, maybe this could in fact stick, they start buying a lot of copper and importing it before it even happens. And, so that has emphasized the tightness of the supply chain. And so I think all of this is very positive for the price of copper and the copper stocks. All right. So let's go on to talking about stocks. That's my favorite. Rocks and stocks are my favorite things to talk about. That's why it's in the name of my reports. And let's get on to Agnico Eagle, which is my top pick for major gold miners. And it has been since way back here. And when it was trading at about $60 per share. And since then, it's been on a tremendous run. And I'll point out a couple of things here. Again, it's been basing like gold has been basing, and it's in a very tight range right now. And it's also trading right at its 50-day moving average. The last time it did this was, guess what? 1 year ago, almost to the exact point, that it hugged the 50-day moving average and then had a very strong rally, and then had another basing period, and then broke out again for another strong rally. Now it's going through its basing period. The This is an easy story to tell with Agnico Eagle. They're a very efficient miner. They have a very low cost. They have a low cost of production relative to their peers. They've been making record after record of free cash flow quarter over quarter as the price of gold has gone up. And the big catalyst is in about a week, 10 day, a week, a little over a week, they're going to be announcing their second quarter earnings. And I think this will be a blockbuster because the price of gold has been in it the highest average price of gold ever for a quarter. And so that's what they were selling their gold into in the second quarter of 2025. And so these are the fundamental reasons I like Agnico Eagle so much is they have no problem increasing their production. They have no problem replacing their what they mine with new deposits, and they are making a lot of free cash flow. But the big catalyst, well, two big catalysts. One, of course, is if gold breaks out, which I think it, as I talked about, think it's going to happen, and also their upcoming quarterly report. So, as I said, Agnico is an easy one to tell the story. They have been my top major gold miner. They continue to be, and they have a lot of catalysts ahead. Now, I only cover one other major mining company, gold miner, which is Newmont. This is in the New York Stock Exchange listing, so these are in are US dollars. And I started covering them right about here, just before they went through their golden cross. And since then, they've been trading quite nicely above their 50-day moving average. And I think that they can also break out with the price of gold. Now, why I started covering them here and not way back here, and sort of missed this rally, but also missed this pullback. And now it's not much above that pullback, 36 to about 42, I think it was when I first picked it. The reason that I picked them in April, early April, was because they had been going through sort of a transition in 2024. They sold off all of their non-core gold mines, and they did great at selling those assets. They expected to bring about 2 billion in. They ended up bringing in 3 billion or more, and they also have some exposure to some of those sales assets that they have. And the other big thing was that they were digesting the takeover of Newcrest. So whenever a company goes through a takeover of a big company like that, it takes a while for them to integrate it into their company and also get a couple quarters of production with the new company as part of the new NewCo, if you will. And so that all took place, and I felt comfortable that that they would another catalyst for them was would be that they can focus on optimizing their tier one gold mines, which will, I think will help their bottom line. And so those were the key reasons. Another important reason is that, and I call this the Newmont effect. Um, Newmont is a household name when generalist investors think about gold miners. And so another household name, if you will, for generalists is the GDX, or the index that is built on major gold miners and some mid tiers as well. And Newmont actually makes up 12% of that index. So if Newmont is doing well, generalist investors look at Newmont, see it doing well, they go, "Oh, okay, well, the big major I think about is doing well." And also, if the GDX is doing well, which is made up 12% by Newmont, then they have a more bullish attitude towards gold stocks, gold miners. And so I felt that the fundamentals were gaining strength for the company, and the Newmont effect was going to kick in, which not only would be positive for Newmont, it would be also positive for other gold stocks. And so that's why those are my two major gold miner picks. Now I'm going to go into the mid tiers. And my favorite mid tier, Alamos Gold, which I also picked early in 2024 when they were trading at about, let's say, about 15 and change, I believe was the price. Since then, they've done very well. They closed on Friday at $34.14. So they have significantly outperformed the price of gold and the index. The same can be said about Agnico Eagle, which I talked about earlier. And they actually have a lot of similarities. I kind of call Alamos Gold my Agnico Eagle of the mid tiers. And because they are also a very efficient miner, they produce gold for less than the average cost of the big gold miners. They are bringing down their costs to closer to, and this one's just an eye opener, that they'll have it closer to $1,000 per ounce. So when you're producing gold at that low of a cost, and you're selling it today, they're selling it for, you can sell it for about $3,300 per ounce. So there's a lot of margin in there, and that means a lot of free cash flow. And so as they've been rising here, their free cash flow has been doing very well. And just like Agnico Eagle, and the price of gold, you notice that it's been going through a basing period here and is trading right around its 50-day moving average. It has dipped down a little bit late in the last 3 or 4 trading sessions, which is kind of surprising to me because they are also on the verge. I think the day after Agnico Eagle reports their second quarter numbers in about a week or so, Alamos also reports their second quarter numbers. And with the average cost of gold being its highest ever for a quarter, I think they've got a good quarterly report coming up. And it wouldn't surprise me if both Agnico Eagle, Alamos Gold, and Newmont, for that matter, start firming up before the quarterly reports start coming out, because it doesn't take a rocket scientist to sort of run the numbers and say, well, if they had their best quarter to sell gold into ever, they should have a good quarterly report coming out. And I think that goes for Agnico Eagle, Newmont, and Alamos Gold. And so, yeah, I mean, to me, I look at Alamos Gold and I see a company that has all the same fundamentals that I look for in any gold miner, being that they are able to replace what they're mining without any problem. They're able to increase their production and quite substantially in the case of Alamos Gold. And with Alamos Gold, they're bringing their cost down to $400 or $500 per ounce, less than the average cost of the gold miners across the board. So Alamos Gold is, to me, it's one of the best performers in the last great gold bull market that happened from 2001 to 2011 was Gold Corp. And what made Gold Corp so special is that they produced gold for a cost that was substantially below their peers. And so Alamos Gold is like the modern day Gold Corp. Gold Corp was bought out years ago. So these are the key reasons that I like Alamos so much. They are one of only two mid tiers that I pick, and which is a good segue into me moving on to my next mid tier, which is Orla Mining. I'm also going to put this one on the Toronto listing. So this is in Canadian dollars. Now look at this fantastic move. Back here in late 2023, they were trading for $3.56 a share. They had a nice run, then a base, and then they've been on a tremendous run ever since. And they closed Friday at $15.75. I first started picking this company when they were, before they even started producing on just before they started producing, they were at their first mine, which was the Camino Rojo project in Zacatecas State, Mexico, which, by the way, is the state of Mexico where I live. And they brought that into production. It was a very good. It is a very good mine. It's a low cost producer and produces a substantial amount of gold. But what really got them off to a great move in late 2024 and has maintained that move ever since is that they were one of the buyers of Newmont's one of their tier two mines that Newmont sold, and they sold it to Orla, one of the mines. I think there was about six, seven, eight mines, tier two mines that they were selling. Now, when you say tier two, it kind of is a bit of a negative, but in the case of Newmont, because they're so big, to move the needle on their bottom line, it has to be a very special mine and what you call a tier one mine. But for a company like Orla to get something like Musselwhite, it's a tier one mine for a mid tier, and that's what they did was they acquired Musselwhite, and so now they have the Camino Rojo mine, they've got Musselwhite, and they've got a project in the pipeline down in Nevada, which will also be an open pit mine that has a very good grade to it and will be a low cost producer. So their pipeline is quite dynamic. They got Camino Rojo in Mexico, they got Musselwhite up in Canada, and they've got their Nevada future mine as well. And so as you can see, they went through their golden cross back here in early April. Since then, the 50-day moving average has stayed above the 200-day moving average, which is one of the bullish indicators that I look for. And for since the Musselwhite story came along, they've been trading quite nicely above the 50-day moving average. They've also been basing with a little more of a swing than you see in the price of gold and Agnico Eagle and Alamos. But noticed that they've recently, after a second dip underneath the 50-day moving average, one of them was back here in April, Jan May, and then again recently in late July, it has broken through that 50-day moving average again. And I'm looking forward to seeing their second quarter um, uh, financial report, as well as progress at Camino Rojo, where they're doing studies about going underground at Camino Rojo, and also Musselwhite developments. Those are the immediate catalysts that I see for them. And of course, the price of gold. If gold's going up, investors start to look down the food chain from the Agnico Eagles of the world and the Newmonts of the world, and they start looking at the mid tiers. Well, this is a great mid tier, as you can see, has been very well received over the last year and a bit, from that low of about $3.50 to the close on Friday of 1575. And again, I really like this move here recently, and that it is quite substantially above the 200-day. And I also like the trajectory of the 200-day. So again, when I look at any company, it's never just the stock action. It's a combination of the fundamentals and the stock action, which the fundamentals tend to drive the stock action. And so, very good outlook for Orla. All righty. So that's all of those taken care of. Now I'm going to move back into the junior gold miners. When I did the opening, I talked about McEwen Mining, McEwen Inc. Being a junior gold miner. Well, there's a brand new junior gold miner that's just in the very early stages of becoming a junior gold miner and the early stages of being a publicly traded company. They only started trading less than a year ago. This August, it'll be a year. Now, they came out of the box pretty hot. Then they came back down. They had a double bottom here. And since then, they've been trending upwards. And of late, they've had quite a nice move above the 50-day moving average. And I think what is fueling that is that they've recently been putting out news about their efforts to become a junior gold miner. So the Borealis mine is in Nevada. It's been around for several years. It has been in production once by a major and once by a junior, and then had some financial difficulties when gold was quite a lot lower. These guys came in with a very timely acquisition of the project, and since they've been a public company, been moving it back towards production. So it's fully permitted, has power, has road access. It has an ADR plant to process so they can actually pour gold right on the property. It has a tailings uh, a leach pad. It has a stockpile that has never gone on to the leach pad. And this this stockpile is how they're going to become a junior gold miner. So they brought in a very well respected toll mining company that's coming in to crush that material and then put it onto the leach pad. And they were actually able to bring that into that process started ahead of schedule and under budget. That's always a good sign. And so in the not too distant future, they will be processing gold from the leach pad from material that went from the stockpile onto the leach pad. So that effort will last them and help them produce gold. Now, it's not going to be a huge amount of gold like, a gold miner, a bigger gold miner, but for a for a junior with a small market capitalization, it's substantial amount of money. And then that will take them well into 2026. And at later in this year, they're planning to start taking fresh material off of the current pits that are still open to have material to be mined off of that and then put into the stockpile and put onto the leach pad. So that will create a really good transition where they go from processing the stockpile material, putting it onto the leach pad, and then through their ADR plant to produce gold right on the project. And then they'll start bringing in new material from the existing pits, and then also, then what will also be important for their future beyond producing from the mining of the known pits is they've got a big project that really hasn't seen a lot of serious exploration except on where they had the known pits that had been in production in the past. Now, I'm very excited about their exploration potential because when I look at an exploration project, there's an old saying in the mining business that big deposits leave big footprints. And what they mean by that is that, you can have a big geophysical anomaly there that suggests that there's something big below. Or even better, you can have a big geochemical anomaly. And so when the fluids that bring up the gold from deeper up towards the surface, when those fluids hit the country rock, it chemically alters that country rock. These are called alteration zones. And Borealis has one of the largest alteration zones anywhere in Nevada, and it's underexplored. And the guy running the key person, the CEO, he's a very talented exploration geologist. In his career, he's been responsible for finding multi-million ounces of gold. He's very talented at exploration, and his partners that run the company are very talented at production. They all have worked at major mining companies and major projects. In fact, they all at one time worked at the one of Canada's largest gold mines today, which is called the Detour Mine. So these guys are all experienced at exploration, at production, and they've all had success in those endeavors. And so they've all come together to build Borealis Mining into what their goal is to bring it to first a small junior gold miner and then grow it into being a mid-tier, and who knows where they go from there. And so as a junior gold miner, they tick all the boxes, and they don't just tick all the boxes for me. They also tick all the boxes for some major, serious investors in gold stocks. One of those is Eric Sprott. He owns, I think, about between 5 and 10% of the company. And Eric has made his wealth um, by investing in gold mining companies. So he's a great one to have on board. And then Rob McEwen, who built Gold Corp from a tiny little gold miner into a hugely successful gold miner that under his tenure went from producing about 50,000 ounces of gold They found the sweet spot of the Red Lake, their Red Lake mine, and it 10x their production to over 500,000 ounces of gold, and also was one of the lowest cost producers while Rob McEwen was running the company. Now, Rob McEwen, earlier I talked about McEwen Inc., but he's also made a lot of money being an investor in other gold stocks. And he owns over 15% of Borealis. So not only does it check all the boxes for me, but it also checks all the boxes for someone like Eric Sprott and Rob McEwen. So I think Borealis Mining has a very bright future. I will do my disclosure now. They are a sponsor of my reports, and I'm also a shareholder of the company. So keep those biases in mind, but I can't make up what they have. They have what they have. The people involved are the people involved. I didn't even mention one of the key people involved, their chairman, is the was the one of the founders of Kinross, which is a major gold mining company now. So, yeah, on the management side of things, on the key shareholder side of things, on the project side of things, this company has all the boxes ticked, and they still have a very low capex. So do your homework on Borealis. All right. So another uh, junior gold miner, I've already talked about them. So in this category, that's McEwen Mining. So I don't need to talk about them, but I've got a new pick for you. In this junior miner, they produce gold and silver, is Sierra Madre Gold and Silver. So let's have a look at Sierra Madre. So they bottomed back here at about 25 cents back in early 2024. And since then, they have been they produce gold and silver, but they report their all-in sustaining costs in silver equivalent. Okay, so right now they are producing silver for about $29 per ounce. So there's a healthy margin in there with the current prices of silver and gold. And they are cash flow positive, and they're making efforts to increase their production and bring down their cost of production. So these are key things that I look for, as I said earlier, in any gold, silver mine, any miner, is the ability to increase their production and also decrease their costs. That will lead to bigger free cash flow. The company is already free cash flow positive. I'm going to work on bringing this company on an interview because I think that they have a very compelling story of how they're going about increasing their production and bringing down their cost and ultimately increasing their free cash flow. And so I want to get their key person on a interview. So if I'm not able to get their CEO on, what I plan on doing, because I'm now covering 32 companies, a lot of those are explorers, and I want to start doing a series where I take two or three companies in a show and I go onto their websites, I look at their presentations, I look at the technical aspects of their exploration and mining and all of that sort of stuff. So with Sierra Madre, in the not too distant future, they're going to be in one of those two shows. There'll either be an interview, which I'm hoping for, or I'll highlight them in a deeper dive where I cover two or three companies. But as you can see in their stock price, they've gone through a golden cross here. Since then, the 50-day moving average has stayed above the 200-day moving average. The 200-day moving average is ascending on a nice angle. They are they're having good performance where they're seeing their stock price. They've created a series of higher lows and a series of higher highs. Recently, they've been out telling their story quite nicely on digital marketing, and they've had a nice breakout, which gets them well above their 50-day moving average. I always like to see this happen. I also like to see this happen where the 50-day stays well above the 200-day moving average. And so they are have a lot of catalysts. That's the nice thing about smaller companies. They tend to have a lot of catalysts because they're, a major mining company. They're not going to be putting out a lot of news other than maybe something important happens like a takeover. They take another company over, and then it's really down to the quarterly reports with a junior miner like a Sierra Madre Gold and Silver. They tend to be doing a lot of exploration, a lot of drilling, and have a lot of news and a lot of development and mining related news at their operations. So Sierra Madre will have lots of catalysts, is what I'm getting at. And I think as investors, um, as generalist investors are starting to come back into the mining stocks because with gold going up and silver having an important breakout, copper having an important breakout, platinum having an important breakout, palladium having an important breakout, this is the start of the next great metals bull market. And the last great one was from around 2001 to 2011, early 2012. And that brought a lot of generalist investors into the mining stocks. And I think we're at the cusp of that happening. It's already started to happen to a degree with the gold stocks, although it hasn't filtered down to the explorers as much. But and to a degree into the developers. But I think we're going to start to see a wave of generalist investors and become a series of waves of generalist investors coming into the metal stocks, to the gold stocks, the silver stocks, the copper stocks, the platinum stocks, the palladium stocks. And as they do, they'll look for the junior miners as well as the majors, the mid tiers, the junior miners, the developers, and the explorers. And so I think that puts Sierra Madre in a very good window for growth, fundamentally at the project and with their stock valuation. All righty. So speaking of developers, next I'm going to get into my developer picks. And you notice I try to break things down into categories. And by the way, later I'm going to in the description of this video, I'm going to have the companies broke down by category, by metal, and where they appear in the video. Okay, so now I'm going to start the developer section, and I'm really bullish on the developers these days because, again, as investors, generalists start to come into the metals, they kind of follow a pattern. They first look at the metal, then they get into the majors, then the mid tiers, then the junior miners, and then the developers, and then the explorers. Now, it doesn't happen all at once. Like, for example, some developers have already started to move quite nicely, in fact. I'm talking about a general wave, if you will. So now I'm going to get into the developers. And the first developer, and I go through these by alphabetical order, but I'm kind of happy that Amex becomes one of my first because Amex has a very exciting project. And I'm also happy to have them as a sponsor. So I'll get my disclosure out of the way right off the bat. And as you can see, they had a pretty significant drop here. And then it corrected all the way down to, let's say, 80 cents. But since then, it has broken out quite dramatically, broke through the 50-day, the 200-day, had a golden cross, is now trading well above the 50-day moving average. And why the decline happened was they put out a mineral resource estimate. Now, not all mineral resource estimates are created equal. There's two key categories in a mineral resource estimate. One can be inferred, which is your lowest confidence level category, and the other is measured and indicated. And that has the reason that it has a higher confidence in the estimate is because you have to have tighter drilling between your holes in order to move it from inferred to measured and indicated. And so a lot of companies, when they come out with a mineral resource estimate, it's almost all in the inferred. And the reason that they didn't do it that way was because they also wanted to quickly come out with a preliminary economic assessment. So that's why you need that higher confidence level, is to do the advanced, the preliminary, and then more advanced economic evaluation. So they actually had in their mineral resource estimate quite tight line spacings because they knew they wanted to do a preliminary economic assessment shortly after putting out that resource. And so this is what, you can use the word constrained when you're talking about that because they're constraining it and defining it more tightly for a higher confidence level so that they can do a preliminary economic assessment. Often, what happens if a resource estimate is all in the inferred category, sometimes those can wait 2, 3, 4, 5, 10 years before they ever do a preliminary economic assessment on it. But these guys knew they wanted to shortly after they put out the mineral resource estimate that they wanted to do a preliminary economic assessment. So they did that. And that helped the stock from this dollar-ish range to get back up to $1.44. But then again, it got hit down because what happened was um, when they did their preliminary economic assessment, they have multiple deposits on this project. The key one is their Champagne zone. Okay. But they also have other smaller deposits on the project as well. And collectively, they make up for close to about 2.5 million ounces of gold on all of the deposits. But then when it bottomed out down here at 70 some cents, 80 cents, let's say, they started to talk about what they call their Champagne zone. Okay. And their Champagne zone is the key zone of the six, I think, that go into their resource estimates. And at the Champagne zone, it they started talking about how they were going to bring that zone forward. And what they started to talk about was that they were going to do a bulk sample on it. So they were actually going to take out a significant amount of tons that they're permitting for now as we speak and do the advanced metallurgical tests and other tests that tell you about the actual grade. Because when you're doing these a lot of the resource estimate, well, all the resource estimate for that matter, is based on drill holes. But in these high grade systems, a lot of time, well, not a lot of times, there are projects with very high grades that when you do a bulk sample, they actually get better, more representative grades than by doing drilling to assess the grade of what you have. And um, one of the important ones that some of my long-term viewers and readers would know about is the Brucejack mine of Pretium. That was a big breakthrough when they did a bulk sample on that, and ultimately I covered it from early in their success through to being taken over for, I think it was $2 to $4 billion. They ended up getting taken over at $19 a share. And so that was a great pick, but a real breakthrough for them was when they did a bulk sample. And that's the first step, well, a key step that Amex is working on to bring their Perron project and specifically the Champagne zone forward. Now, another thing they started talking about was that they wanted to do a preliminary economic assessment on toll milling their Champagne zone. So what that means is you mine the rock at the Perron project and you take it to a nearby mill where they toll mill it for you. And that could be really crucial for this project because there are major mines all around them that have excess capacity. And they could use that available room in their mill to process the Amex material. And why that is also attractive to these other companies is they make some money off of it, but they can take lower grade material, mix it in with the higher grade material from Perron Champagne zone, and that makes for more efficient milling. And so that's another variable. So then they also put out an updated mineral resource estimate. So when you do when you want to convert your ounces from inferred into the measured and indicated category, you have to do tighter line spacing. Now, often when you do that tighter line spacing, the the grade goes down and you have troubles converting what was inferred into measured and indicated as far as the ounces contained. But in their case, not only did they get an increase in the amount of ounces in the resource, they also got a huge 43% increase in the average grade. And why that happens is these high grade deposits, you need to do these really tight lines or drill holes between your deposits in order to get a more representative grade. So in the Champagne zone, in this updated mineral resource estimate, they have 800, almost 900,000 ounces of gold in the measured and indicated category, with an average grade of 16.2 ounces per ton. So that's over a half an ounce per ton for my American viewers. And you don't find, and also they have another almost 200,000 ounces in the inferred still, with an average grade of almost 10 grams per ton of gold. So they need to do some tighter line spacing on, or tighter spacing with their drill holes to convert that into the measured and indicated. So when you start talking about 16 grams, that's very special these days in something that could be well over 1 million ounces because it's still wide open. The high grade mineralization starts almost right at the surface, continues down beyond 1,000 meters. It's an orogenic gold system, and in these orogenic gold systems, to have that much continuity of the high grade for over 1,000 meters is very unusual. Usually they're found in smaller lenses of, let's say, 300, 400 meters of continuity that they can mine of the high grade. This one has over 1,000 meters of high grade continuity. It has such unique continuity for an orogenic gold system that one of the world experts at one of the universities in Canada for orogenic gold systems did a paper that you can actually find on Amex's website that talks about the unique continuity of the high grade at this Champagne zone. It used to be called the high grade zone. Now they call it the Champagne zone. But you can find that paper on their website. And for those rock geeks like me that love to read about high grade gold, I recommend you have a read of that. So, catalysts. Catalysts are the permitting of the bulk sample and how big that will be, the preliminary economic assessment to evaluate toll milling of the Champagne zone. And the idea there is that they start with toll milling, and because it's such a high grade system, that the profit from that they would use to build their own mill on the Perron project beside the high grade zone. So there is a staged way to do this. Um, and then, of course, exploration. They're drilling, they have more results to come out, more drilling. And something that recently happened was they announced a $30 million financing, of which I think 17 million of that is coming from Eldorado Gold, which is a mid-tier gold miner. And they'll represent 17% of the shareholdings once this financing is completed. So that's a pretty good endorsement of the quality of the project as well. So that's the Amex story, Amex Exploration, and do your homework on Amex. Okay, so the next developer I have is Arizona Metals. So let's look at Arizona Metals. Especially let's look at, I've been following this company for a few years, and so they recently had a big drop in their stock price, which, people would probably say, well, why are you picking it now? What happened? Why did this big drop happen? Well, they put out a mineral resource estimate, and I think the market was expecting that it would be a lot bigger than it was. But you have to understand the rationale behind how like I said earlier, not all mineral resource estimates are created equal. So this company they want to do a preliminary economic assessment closely after they do their mineral resource estimate. So when you do it that way, you can't have it all in the inferred category. You need to have it constrained to the degree that it can then have a preliminary economic assessment done on it. So it kind of is very conservative, if you will, because you want to do a preliminary economic assessment on it. And so when that happens, you know that the resource is significantly bigger than what they report in the mineral resource estimate that they want to quickly do a preliminary economic assessment on. So it's quite conservative, and that's why I'm picking them now. Is I think the market misunderstood the logic behind what they were doing by doing a mineral resource estimate that was conservative so that they could then do a preliminary economic assessment on it. And then after that, they would do an updated resource and this sort of stuff. So I think that there's, let's say, a lot of meat left on the bone of what they have and how they represent that in resource estimates and preliminary economic assessments and in updated resource estimates. So I think the market overreacted to a conservative uh, resource estimate, and that was conservative because they wanted to do a preliminary economic assessment on it. And therefore, that's why I'm pulling the trigger now to pick them. And basically, I couldn't have picked them for since 2021 at this valuation. But I think they got a really good project, and it's got a lot of room to grow. It's already pretty significant. And yeah, I'm going to try and get the folks at Arizona Metals on an interview so we can do a deeper dive into their project. But barring if I'm unable to get them on an interview, I will do a deeper dive into their project. But I wanted to introduce them today for the fundamental reasons that I talked about earlier. And this is one that I picked because I think it can be a great turnaround story that is misunderstood at this point in time and is creating an opportunity. All right. So that's that one. All right. My next developer is a silver development company called Blackrock Silver. Uh, and Blackrock Silver is a company that I've been following for a few years. And recently, they've made a quite substantial breakout. They hit their low in April at about 27 cents Canadian. So they're up, they're doubled since then in price. And why they kind of went into this move from, let's say, 50 some cents down to 27 was because they weren't drilling. They were doing a lot of the work to assess their resource and plan their drilling so that they could increase the resource. So they now sit at about 100 million ounces of silver. It has a very high grade for a resource estimate. It is actually the highest grade for a company at this stage of development anywhere in the world. It's not the biggest, but I think that they have a lot of room for it to get bigger. And so they did all the groundwork to get ready for their drilling. And ever since they started drilling again and getting rolling up their sleeves on the drilling, it's had a very nice move. Um, and as you can see, it recently went through a golden cross. It is trading substantially above the 50-day moving average. I think the 200-day moving average, the ascent will get a higher and more bullish. And the catalysts for them are they're doing a lot of drilling to increase their resource estimate and also upgrade it from inferred to measured and indicated. And I think that that will lead them towards more updated preliminary economic assessments, updated resource estimates. So they're drilling, they've got updated resource estimates to do, updated preliminary economic assessments to do. They've got a really good project, and it's in Nevada. It's right beside the town of Tonopah. It's actually called the Tonopah Project, which has a long history of mining and important silver mining in Nevada. And you can read all about that history of the Tonopah region on their website, or you could even do a Google search. It was that famous. And so they have the western extension of what was mined in the past. They've gone in, done a lot of drilling, found a lot of high grade, and yeah, they're advancing the project really well. There's not a lot of high quality development projects for silver in the pipeline. It's in Nevada, which is one of the great jurisdictions of the world for mining. And so it's got a great future ahead of it. So do your homework on Blackrock Silver. All righty. Uh, the next company is Emperor Metals. Now, I put them into the developer category when they're just sort of really still an explorer. But once a company does a mineral resource estimate, that's the point that I consider them to be in development. Now, a lot of companies, after they put out their first mineral resource estimate, they're still really exploration drives them a lot, but this is the sort of move from one category, pure exploration, to then developer explorer. And they had a very good report out on their gold, their open pit gold project that was very well received. As you can see, it went from about 20 cents a share to 30 cents a share. And yeah, they had a very good report out on their gold resource. It's an open pit that it could be quite large. It's still open to grow. They also have a high grade element to that resource as well. I've had them on a past show, and I actually have an email out to their CEO to try to get him on another show to talk about this recent resource estimate. But as you can see, they went through a golden cross in late February. And since May, they are trading quite significantly above their 50-day moving average. And they are a company that they are in the Abitibi region of Canada, which is the one of the best mining jurisdictions anywhere in the world. Okay. And it has mines all over the place, mills all over the place. And that's sort of how they envision bringing this project into production is through toll milling, where they would mine the material and send it off to one of these nearby mills, and that would save them the cost of building their own, building their own camp and all this because it's close to a town and all that sort of good stuff. And yeah, it could be quite an exceptional project. Now, the key person, John Florek at the company, he's a mine builder. He was part of the team that built the Detour Lake mine, which is now called Detour, which is one of Canada's largest gold mining companies. He's a really interesting character because he's also very much into technology and to artificial intelligence. And I think he's a really cool cat. I've had him on the show before. I want to have him on again to talk about this resource estimate that they did. But yeah, they use artificial intelligence, and as you can see from the reaction, it helped them a lot with their resource estimate. It helps them with their targeting to expand on the resource. And I think they've got a very bright future and still a very modest valuation. And so that's why I wanted to talk about Emperor Metals. All right. So the next one is Generation Mining. So earlier I talked about how I'm bullish on copper and I'm also bullish on platinum and palladium. The problem with platinum and palladium, trying to find a stock, a miner, or a company that has a serious platinum and palladium in their project, it's really, really difficult. Because platinum and palladium had been in the dumps for so long, there wasn't a lot of exploration, there wasn't a lot of development, there's not a lot of majors out there. So there's not a lot to choose from for a guy like me or a gal who's not like me um, to get exposure to those metals through a stock. And in the case of Generation Mining, they have it's really a copper and palladium mine with a platinum kicker. So the palladium mining will be over 100,000 ounces per year. The copper mining will be about 42 million pounds per year, and that's in their 2025 feasibility study. And recently, they've had quite a nice move, a combination of reasons. They received all their permits to bring their marathon project into production, and also the price movement of platinum and palladium has helped them because you go looking around for companies with platinum and palladium in their project, and there's not very many of them. Now, other great dynamics of this company are that they're only they're right beside 10 kilometers from downtown Marathon, Ontario. So that means they won't have to build a camp out of the middle of nowhere. The Trans-Canada Highway goes right through their project. The power that to Marathon goes right through their project. So close to a town, major highway running through the project, power through the project. And this all affects the internal rate of return, which is at about 30% using lower prices of copper and platinum and palladium. Um, and so, really great project. I think that this is going to be an important mine of the not too distant future. I'll also point out that they've gone through a really textbook cup and handle and now have broken out of that handle and are trading significantly above their 50-day moving average and their 200-day moving average. I recently, I think it was right about here, had Jamie Levy on for an interview, and I'm trying to get Jamie and his partner uh, on for another interview really soon because I want to get my audience to get a better understanding of their project and the key guys that are driving the company forward. And so, yeah, if you're looking to get involved with a company that has platinum and palladium and copper, That Generation Mining is a very good one for you to have a look at. And they still have a very modest valuation. All righty. So another company that my viewers have heard about in the past, I haven't covered them for a while, is Meridian Mining. This is a copper gold project, open pit project in Brazil that is in a mining friendly part of Brazil. Practically all of the major mining companies are in that area or in Brazil, which is a good indicator when you're looking at countries in South America. When all the majors are in there, that's a good sign that it's a mining friendly jurisdiction. It's a developer. So they've gone through resource estimates, preliminary economic assessments. They're working on a pre-feasibility study. They're constantly putting out news because they're having a lot of drill holes out that come back with excellent grades. And that's kind of why it goes through these waves, if you will. When they put out good news, it tends to go up and then softens up as they're waiting for new news. Then that goes up again, softens up. But you notice that since it's made this golden cross here, that it made a new high and then it made a higher low, and it had a pretty good pullback from 70 cents to back down to around 50 cents. And then it started another run, but this time the run was higher than the last high. Good sign. You notice that when it came off of that, it didn't come down like it did the previous pullback and created another higher low. So you've got the higher low, higher low, higher high. Then it had another run. And it had another higher high. And it's come back down here and another base. Again, not as significant of a pullback while they're waiting for more news. And it's another higher low. This one, like this one and this one, is crowding around that 50-day moving average. So it looks like it's ready for another breakout. The 200-day moving average is going up at a nice angle. The 50-day, there's a nice gap between the 50-day and the 200-day. And yeah, I think it's a really good project. And the timing is very good now as well, with copper and gold getting more bullish. And yeah, they're a catalyst-rich company, so they're regularly putting out really good news. And yeah, that's the Meridian story. All right. All right. The next one is a brand new company for my coverage. And that is, or sorry, I've interviewed them recently. Nuvau Minerals. Now, Nuvau Minerals is a newly listed company in December of 2024. As is often the case, they can drift down when they're a new company, and then they bottom out, like they had a double bottom here. And now they're starting to come to life again, and on good volume, increased volume, new life in the stock. And they have a very large project it's called the Matagami project. The Matagami mine is well known in Quebec, but it was only known for being a base metal mine that Glencore, one of the world's large gold or mining companies, had in production until just like 2 years ago. So the mine is still in great shape. The permits, everybody's happy. They want to see it get back into production. I recently did an interview with them. I just put it out a few days ago. And um, it's a good one for you to watch. You can find it on my YouTube channel at Rocks and Stocks News on YouTube, or go to my Substack and you can find it. But what really excites me about is that they can be a near-term producer to turn the base metal mine back on at the Matagami mine. Plus, it's that project is in one of the best gold jurisdictions anywhere in the world. And this project has never been explored for gold. But when I was talking to management just a few days ago in that interview, we had a long talk about their gold potential. And as a gold exploration project, this one is very, very exceptional. I'm not going to go into all the reasons why I was excited about their gold exploration potential, because you can just go to my to that interview and check that out. And I always like people to do their homework anyway, so that's a good one for you to do your homework on. But let me tell you, this is a great gold exploration project on a big, I think it's a 175 square kilometer project in the Abitibi that has never been drilled for gold. In fact, they had one of the portals that they sunk into for the base metal mine on the east side or west side of the project. It actually hit a vein when they were doing that with high grade gold in it. But the Glencore never followed that up, never drilled for it. And I'm excited about them getting to drill that. Plus, they've also got another area where they did surface sampling that came back with a lot of high grade or a lot of grains of gold right at the surface. And these are called pristine grains. When a glacier moves gold from its bedrock source, it can get rounded, like placer when you see these guys panning gold in the rivers. That is well rounded because it's been moved from its source. When they're pristine, it's called angular, so there's no rounding because it came from a nearby source. Often that can be 50, 100, 200, 300 meters from the source. Because if a bunch of, and they got very high counts, uh, they may have the highest count ever in a surface sample of gold grains and with a high percentage of pristine anywhere in Quebec. One of the great mines in Quebec was found because of that finding a sample locations where they had high amounts of gold grains, pristine gold grains. And so it's a great project for gold exploration. I can't wait until they start talking about their gold exploration drilling and their efforts to bring the base metals back into production. They got a really tiny market valuation, and I think they've got a lot of upside potential left in them. And so that's why I wanted to talk about Nuvau Minerals. All right. The next company, now I could talk about McEwen Mining, which I talked about earlier as a developer, because of their great copper development project, but I'm not going to because I already talked about them. But they are also in this developer category. Okay, my final developer is certainly not my least. In fact, they are probably the best developer of precious metals, gold and silver, anywhere in the world. They are a sponsor, so keep my bias in perspective there. But why I invited them even before they were a sponsor to appear and be interviewed on my show was because at that time they had their preliminary economic assessment out. and it had spectacular numbers in it. It had an IRR of 85%. Putting that into context, there are very few companies out or projects out there that have that's an extremely high internal rate of return because it's high grade and it's low cost. The IRR was so exceptional that the payback of the capex to uh, to to cover building the mine will be paid back in that base case scenario with an 85% IRR in 9 months. Plus, because it's in Mexico beside a highway and it's an underground mine, it will only have a capital cost of $225 million US. Okay. Most mines these days are half a billion to a billion plus. So to have a project with a high IRR uh, and low capex or fast payback of the capex is quite exceptional. Now, and you can do your own homework. Don't take my word for it. As I said, they're a sponsor. Go out and look at comparables, and you'll find the answer to that, why I said what I just said. All right. Now, if you use current prices or their in their sensitivity tables closer to what gold and silver are trading at today. Now the IRR is in the triple digits. The payback of the capex is less than 6 months. You just don't find these anywhere. If you do, please let me know because I want to talk about them on my show. I would if I had more to talk about, but I don't, so I can't. And so yeah, the if you look at the preliminary economic assessment that they have, the numbers are exceptional. They've got a great project. It's wide open for exploration. They've only focused their preliminary economic assessment on a few of the veins, and these epithermal veins, they come in clusters. They have a whole district of them, and they have plenty of them that they still need to drill off, and they're making new discoveries. And so, that's why here's another metric that's quite interesting. They already have $200 million in the bank, and their capex to build the mine is 225. Most juniors don't have that scenario. It's because this project is so exceptional that they've been able to raise all that money, and they actually have a valuation of about a billion, 1.2 billion. And I think that a lot of their growth is ahead of them. When they bring the project into production, it will almost immediately make them a mid-tier to almost a major silver producer right out of the gate. And that's not heard of very often in any metal. And when I describe them, I think of when technology companies have had great success, they're called unicorns. Well, I think that Vizsla Silver is going to be a silver unicorn, a silver mining unicorn. And so I think you should do your homework on them. All right. Okay. So I've been at this show for an hour and a half or more, an hour and 45 minutes. And it's taken me longer to get to the end of the developers. But I have a group of explorers and some new picks in the explorers. So I'm going to try and make this really quick. And don't worry, I'm going to be doing more coverage of all of these companies with interviews and that sort of stuff. And while I'm doing this, I'm just going to go back and pull up the gold chart as the background. And I'm just going to try and get about a minute for each of these into a minute pitch, sort of the elevator pitch. Oh my gosh, Goliath Resources, my explorer with a important discovery. I didn't get a chance to give you the big rundown on them, but I did last week, last Sunday's show. Just go to my last interview. I would say a lot of the same things I did then about Goliath. They are in a category of one which is my category is I have a group a group I look at to be gold explorers with important discoveries. And I only have one of those, which is Goliath. And I went into quite detail last week, last Sunday's show. You can find that on the YouTube channel at YouTube. Just go search me for Rocks and Stocks News. And also, you can find that on my Substack at rocksandstocks.substack.com. And actually, I got a little something for you when it comes to Goliath. So here is, in a nutshell, this tells you a lot. And it's on their PowerPoint presentation. This tells you a lot about why I like this project so much. So you see all these blue and these white spots. These are the white spot is where the drill is set up. The black is the trace of which direction the drill hole went in. But what I really want to point out is these red lines here. These are where they have found visible gold in the drill holes. Okay. And as you can see, the visible gold is like spread out all over the place. I mean, you're looking from this side to this side, and you can actually, even the minimal drilling over here has visible gold in it too. So if you actually drew from there to there, you're looking at about 2,000 meters. If you just go from this side to, let's say, the top of the mountain, you're looking at probably 1,200, 1,300 meters. And from here to here, probably about 800 meters with visible gold distributed in multiple locations all over that. This is very unique, my friends. You don't see this kind of widespread distribution of visible gold with high grades very often. And this, you can just see here, like 34 grams over 6 meters, 34 grams over 9 meters, then 500 meters away, 8.34 grams over 23 meters. But why I love this so much, this map so much, is it just shows you the widespread distribution of visible gold. This, I think, is going to prove ultimately to be one of the top three high-grade gold deposits in all of the Golden Triangle of British Columbia. And yeah, have a look at that. Okay, so now I'm going to get into the explorers. I'm going to be really brief with them because this show is already going to be 2 hours long. But don't worry, I'm going to have more coverage on these companies. Some of them I talked about last week, and some of them are new. So I'm just going to quickly go over them. Canadian Gold Corp, past producer, high grade orogenic gold system, drilling right now. It's in Manitoba. It's near a town. It's got a lot of Flin Flon, which is a great mining jurisdiction. Rob McEwen owns a big chunk of this company. CGC is their symbol, Canadian Gold Corp. So CGC is their symbol. Have a look at them. Dryden Gold, DRY. They're in Dryden, Ontario. which is about 100 kilometers south of Red Lake, Ontario. The geological similarities are all the same in Red Lake as in Dryden. But Dryden has not had nearly as much work done on it because it was a patchwork of projects held by many different owners. And Dryden has gone in there and consolidated the whole basically district. They have a key structural feature on the project. They're finding a lot of visible gold in their drilling. I think they've gone through an important breakthrough, which is they're really starting to understand the controls, the structural controls of where to look for the high grade gold. And I'm very excited about this project because I think that this could be the Red Lake 2.0, if you will, that's underexplored, lots of high grade gold, same geological setting. That's another good one. DRY is their stock symbol. Dryden Gold is their name. Have a look at them. Hercules Metals. I'm trying to get them on a show because actually, I'm going to show you they recently had a really significant breakout. And why that happened was because they announced an update to their exploration. They're still awaiting assay results, but the way that they're describing what they're seeing in the drill core tells you that they're onto something really great with their drilling, looking for a porphyry in Idaho. And that update saw their stock move up quite nicely. I think I covered them last week before this big move in big. I did last Sunday. So I think that's where it closed last Friday. And it's up quite nice. I think it was 60 cents when I covered it. So yeah, they did a really good announcement of their updates to what they're seeing in their drill core, explaining the geophysics, explaining what they're hitting, explaining why that's important, explaining why they're adding drill rigs to their property. And yeah, Hercules has a really good story. And I think you want to check them out. Next company is Inventus. Inventus stock symbol is IVS. They've got a conglomerate gold story in Ontario. Conglomerate Gold, the greatest gold mine ever, was in South Africa in the Witwatersrand, which was also a conglomerate gold discovery. They've been putting out good news lately. They're doing a bulk sample, they're drilling, they're finding lots of good stuff in their drilling and getting ready to do a big bulk sample. So they've had a nice breakout of late. And yeah, they're going to have a lot of catalysts coming up. And one of those is they recently announced a deal to have McEwen Mining do toll milling of their bulk sample. So that's really interesting. And Rob McEwen is a significant shareholder of Inventus. So yeah, there's that angle. Okay. Silver, Kootenay Silver. Um, they've got a really great gold, silver, high grade silver discovery in Mexico. Now they've done an initial resource estimate, and it's kind of small, 50 million ounces of silver. And I think it's got the potential to be hundreds of million ounces of silver, making it, I think that this could be my next important explorer or a silver explorer with an important discovery. I think they're going to move up in the category. Now, they got hammered pretty good on Friday, and there was no news out. It's really odd. They didn't have any news out relating to their drilling or anything like that. And It got smacked all the way down to $1.09 here, which is why I originally started picking this company when they were about 70 cents or so. And so, they've been up over $1.50, came back down to $1.09. I like the story a lot. They keep putting out great drill results. They'll be drilling for forever, basically. They have lots of assay results to come out. They're going to do an updated resource over the next year. They're going to do a preliminary economic assessment. So, yeah, this catalyst-rich, silver-focused explorer in Mexico tells that story. Norsemont, NOM, they're down in Chile. And they've got a really great project, over 2 million ounces of gold in oxide gold that can be open pit mined and heap leached with very good recoveries from the oxide gold. And they also have what looks like the potential to make the porphyry that cause the epithermal vein system where the oxides are at the top of the system. Plus, they need to go through and find the rest of the veins coming off the porphyry and look for the porphyry. So, yeah, this is a wide open exploration project on a project that has permits. It has past production. It has an ADR plant. So they got all the mine infrastructure right there, road access can pretty much be worked year round. And I'm looking forward to their next rounds of drilling, which I think is in the not too distant future. I'd also covered these guys quite significantly in my last report on last Sunday. Just go to my my YouTube and look in the description and you'll see where I talked about Norsemont. So yeah, there's the Norsemont story. Power Nickel or Power, sorry, they changed their name from Power Nickel. Now they're Power Polymetallic, I think is the full name. It's the new name change. Even Stock Charts hasn't updated. They still call them Power Nickel too. So excuse me if I do, but their symbol is PNPN. They had been going sort of in through here because they weren't drilling. Now they're drilling again and they've started to break out. They got a great high grade copper with other metals in it, copper, gold, silver, nickel. And they've had exceptional drill results. That helped them get from way back here, they were trading at about 21 cents, traded all the way up to a couple bucks, have been consolidated while they weren't drilling, but now they're drilling again. And I think they'll have a lot of catalysts coming out for several months into the future. So PNPN has what I think is going to advance up into my copper, nickel, base or precious and base metal explorer with an important discovery. I could almost put them there already, but I'll call them an explorer for now. Uh, Quimbaya, QIM, is in the name of the country escapes me for the moment, Colombia. Uh, and there's been big successes in Colombia of late. Aris Mining has been just on fire. Collective Mining also on fire. These guys have a big land package right beside Aris Segovia Mine. And the vein network goes from Segovia right onto their and through their property. Their property has seen a lot of artisanal miners, the local miners, just like at Segovia next door. those artisanal miners, they do a lot of the work that helps an explorer find what they're looking for. And because basically that's hard work. And they're not doing that hard work unless they're finding gold. So they kind of identify where there's gold. And so this company is about to start a drill program. And I was supposed to have them on last Tuesday, but we had some scheduling problems. So I hope to have them on soon to talk about their exploration potential at the project Tahami, right beside Segovia, Aris's Segovia mine, and have one of their key geologists on as well. You'll see the link when I do that interview. I hope it's really soon because I think they're about to start drilling really soon. And I like to tell the story of a company like Quimbaya um, early when they're starting their drilling, why they're starting it, and then hopefully keep covering it as they make discoveries, which I think they will. There's just so many indicators on that project. Like, I mean, the best place to look for a highly profitable mine is right beside one, especially if the veins that highly profitable mine is mining go right through the property of the next door neighbor, which is Quimbaya. And yeah, that's the Quimbaya story. Stay tuned for when I do an interview with them. Ramp Metals is an explorer that has made I think they're very, very early days into a high grade gold discovery and potentially a VMS cluster of VMS deposits, but it's early days. So, keep in mind that they're only scratching the surface, like literally on the gold discovery. I think they've only drilled like 8 holes in total. Last year they drilled one discovery hole. This year they've gone in and followed up with that with 7 additional holes. So that's nothing in exploration. They got to do a lot more drilling there. And then they got a VMS target about 5 or 6 kilometers away that uh, I think they're touching on something there as well. So keep keep them on your radar screen. Watch for their next news release. They could have assay results out at any time now, and I'll be watching those very closely. Okay, Xali Gold. The company is spelled Xali, but in Spanish you say Chali. Now, Chali has two of my favorite exploration projects, and they're getting no love. They got a $2 or $3 million valuation. They're it's not easy to get exploration money these days, even though gold and silver are doing really well. But as far as exploration projects go, they've got a 57 square kilometers right beside Las Chispas that got Silvercrest to be a great miner and got them bought out. They own the next door, they're optioning the next door project called Serape. That's a great project. The vein network that goes through Las Chispas also continues right through the Serape project. And then they've also got this project called El Oro. El Oro was a historical producer that produced 8 million ounces of high grade gold. And this was done without any real drilling. They would basically, the old timers would go in there and mine, chase the veins and mine what they could find by underground tunneling. And it really hasn't seen a lot of serious drilling, modern exploration, if you will. And as far as these epithermal vein systems go, sometimes you can one drill hole and you got another great vein, or go deeper or go along strike where they didn't do any drilling, those old timers. Um, it's a really great that El Oro is a really great project too. Both those projects are in Mexico, and I'm working on getting Joey Freeze on to do an interview to talk about those two projects because, like I said, when it comes to exploration for gold and silver, those are two outstanding exploration projects that just need a little bit of money, and I think it will go a long way. So, yeah, Xali Gold or XGC is their stock symbol, and check them out and stay tuned. I'm going to do an interview with them in the not too distant future. All right. I'm winding down to my last four picks here, and these are all brand new picks, never been covered on the company. Argenta Silver is looking for high grade silver in Argentina. They've only been publicly trading since October of 2024. They've gone through a beautiful cup and handle. And they're drilling right now on a project that already has a 50 million ounce silver resource on it. And the average grade is 453 grams per ton of silver. Really great silver exploration project that's underexplored. Frank Justra is a key shareholder of this company. He actually helped put the company together and get it publicly trading. And now they're drilling to expand on that 50 million ounce high grade silver resource in Argentina. I love the sounds of this. I'm going to try and get someone from their management on. It's a brand new company, a brand new pick for me. And I think I'm going to be doing a lot of coverage of this company, and I'll try to get their management on for an interview. If I can't succeed at getting them on for an interview, I'll do my own deep dive into the technical merits of this project, but let's just say it has a lot of technical merits. So that's a new one for me. Okay. Now, Almadex is a brand new pick for me. I think I've covered them in past reports, but Almadex, sorry. Almadex. Let's get Almadex up here. Um, Now, where are you, Almadex? Dot Almadex. DMX, sorry, gotta get this up. Dot B. It says District Metals. What's going on here? Okay, let me just get CEO. Sometimes stock charts doesn't always get these correct. They mix up the name, so I'll go to my radar screen here, and where is it? Oh yeah, it's down at the bottom. I just recently added them. Where are they? Don't you know it? When I want to talk about a brand new company, I can't find them. There it is. DEX. It was my fault. I screwed up. DEX. Here, let's go back here. And I can't even read my own writing sometimes, as my mom used to call it, my chicken scratch. Uh, so Almadex is a really interesting company. It's run by a father and son team that are very talented. They've run a prospect generator model and had lots of success with it. And now they're drilling a project that they own 100% of. Prospect generators, they go out and do a significant amount of work. Then they get a partner in to do the advanced exploration. In this case, they're doing it themselves. And they're looking for porphyry in Nevada. And they have their own drill rigs. and they have a lot of money, so they can do a lot of drilling, and they kind of feel like they tapped the edge in 2024, like they tagged the edge of a porphyry, and now they're going for the guts of that system. This could be a very exciting discovery play. And as they've been talking about that project and talking about, I may even have the state wrong. I'm sorry. I've been talking about so many companies, I can't remember everything. Go to their website, Almadex website. Um, I know for sure it's a porphyry. I know for sure that they think that they tagged the edge of it. I know for sure that they're drilling it. And yeah, really talented geologists running this company, serial success stories, and prospect generators that now have a project they're keeping 100% of. That's an exciting thing for me. They went through their golden cross right here, trading up quite nicely from the lows of the last year, which was about 15 cents. So they're over double from that. Stay tuned for this one. If they hit anything like they think they could, if they get into the guts of that porphyry, this will be a much higher priced junior. They got lots of money. I think they got over $5 million recently, and through an interesting way, do some homework on Almadex. Um, I find them to be a very interesting story. All right, another brand new company for my coverage is Luca Mining. Luca Mining done very well here of late. They're up quite significantly. Why didn't I cover them sooner? Because I think that they're less risky now than they were before. They're a new producer. They're making money. They've got strong drill results. They are reducing their debt quite dramatically. I think the last year they were at about 31 million. Now they're only down to $8 million in debt. Um, they think they'll have 30 to 40 million dollars of free cash flow in 2025. It's gold, copper, silver, zinc. They've got several projects, a couple of them in production. I'm going to try and get these people on to do an interview because, again, here's a basing period right at their 50-day moving average. Recently broke out on good news. I think they're going to have a lot of catalysts coming up. And to get more people more acquainted than the bullet points I just talked about, I'm going to try and get them on for an interview. But I like their chances to go significantly higher and build a free cash flow machine of a mine with a great pipeline to keep growing the company going into the future. All right, I'm down to my last two, NCX and Northisle Copper and Gold. This is a copper gold porphyry developer in the north part of Vancouver Island. Got a really dynamic guy running the company, CEO. They recently announced, I think it was a $30 million financing. Oh, I got to hear $35 million financing. Wheaton, the royalty company, is taking 5 million of that. Um, and it's a really serious project. And I'm going to try and get he's good at explaining the company. I want to get their management on, but I wanted to let you know that this is a new pick, Northisle Copper and Gold. They got a serious resource with serious numbers in the size of it and in the preliminary economic assessment. But before I stop talking about these guys, because unfortunately I'm running out of time, I'm already at 2 hours and 15 minutes into the show. You see this base? Look at how they base and they run. They base and they run. I think that this is another think it even starts, well, actually starts back here. Base, run, base, run, base, run, base, run, base, run, base, run. Guess what I think is next? It's not going to take a rocket scientist to figure that out. Now, once they first, they'll need to close off that $35 million financing, which I would imagine it's going to be very quick. And then they will have lots to talk about. But they still have a very modest valuation considering how much copper and gold they have in that system, and how the numbers are looking really great in that project, and yet they still have a modest valuation relative to the quality of that project. So again, new pick. I'm going to work on getting them into an interview. If I fail at getting them into an interview, I'll do a deep dive on these. I'm going to do a series of deep dive shows where I talk about two or three companies and go into the guts of their story a little more fully. As I said, I'm 2 hours and 15 minutes into this show, so I can't really get into it in great detail. But yeah, Northisle, new pick. Okay, and the last company I'm going to talk about is Rackla. Now, they were a new pick in my last week's show, and they've done some drilling. They're looking for a reduced intrusion related gold system like this great success that Snowline has had over on the Yukon side of the border. These guys are in the Northwest Territory side, but that whole trend, the tombstone trend, continues from Alaska, Yukon, and into the Northwest Territories. And these guys have done significant sampling on outcropping veins. These reduced intrusions, they have a high density of veins. And they've done sampling, come back with really great sampling. That's why it's done like this move. Now, they've done one hole so far that they've shown the drill core. And it's not what gets me the most excited about this project. So they kind of drilled on the edge of a mountain across, and I don't think that they really drilled into the guts of where they will be finding a lot, the density of the veins with visible gold in it. I think they were kind of at the edge of the system. And now one hole went this way, and the next hole is going into the mountain. That's the one that is why I'm really interested. I want to see what comes out of that second hole. I think what will come out of that second hole, the first hole didn't really look like the kind of stuff you saw at Snowline Gold in the early days, or since then. But I think the second hole could see a high density of quartz veining, because you can see it in the surface, right? But they kind of, like I said, they kind of cut across the edge of the mountain. And I think they need to go into the mountain, which is what they're doing on their second hole. So Rackla Metals, looking for a reduced intrusion related gold system like Snowline Gold. Really sharp team involved with that company. And if they make any kind of have any kind of success finding a reduced intrusion related gold system with good grades in it, this one will blast off. All righty. So there you go. I told you this was going to be a long one. And I delivered. It's almost 2.5 hours of coverage here because I had so many companies to talk about. And that in itself kind of shocks me, folks. The last peak I got to as far as companies under coverage was 29 during the 2001 to 2011 bull market. I'm quite proud to say that almost 20 of those either became mining companies or were taken over. So I had a pretty good hit rate with what I call companies that went into my mining hall of fame. My person, if they go from explorer, which was mostly what I covered back then, into becoming a producer or a takeover, I put them in my mining hall of fame. And so, but now I have 32, and I think I can add to that in the next little while. So I wanted to get my current entire list out with all the names of all the ones I'm covering. Some of them I didn't get to cover as much as I would like to because the show went longer than I anticipated. You'll find the description, the companies covered, the category, the time they were in the video, all that stuff in at the YouTube presentation or on the YouTube. But yeah, it's quite shocking to see us at the early stages of the next great metals bull market, and I can still find 32 companies that I consider undervalued with great catalysts, the potential to see their stock valuations go up quite dramatically. And yeah, it's quite shocking to me actually that I can find so many companies to cover still. And I probably can come up with some more in the not too distant future. So, um, and again, what I'm going to do is a lot of the explorers, I want to do a deeper dive into them. So I'll probably take two or three off of this list and do a deeper dive into them. And yeah, I mean, my majors, my mid tiers, my developers, well, maybe some of the developers, I'll do those deeper dives too. And then deeper dives into the explorers because, they are not as well covered. And I really think investors want to understand as much as they can about it. And with my experience of 32 years of being in the exploration business and having great mentors in geology, geophysics, geochemistry, and plus I believe I have a bit of a talent in bringing that highly technical stuff and make it understandable to everybody, whether they're a geologist or a non-geologist, investors and that sort of thing. So I'm going to do a series of those deep dives where now that I've got my entire list, current entire list, that I think I can add some more. Um, I want to do those deeper dives and more interviews with the new picks, more interviews from the current picks and all that sort of stuff. So yeah, that's the show. Thanks for joining me. Have a great day. Talk to you soon.